Hey folks, Alex here, 9 to 5 to Freedom. Is Ulty the golden goose? Should we sell everything in gold all on an Ulty? Is this going to make everybody rich? Is this the ultimate fund? There's so much buzz about it right now. Let's talk about that. Why there's buzz. Is Ulty the answer? What's going on with the prospectus? Is it true that it's changed? Let's talk about the holdings, talk about the price, and the dividends that it's paying. So buckle up, folks. This is going to be a good one. First, shout out to all my new subscribers, folks. My channel is growing. Appreciate all of the comments. Listen, folks, I accept if you have different opinions, leave a comment. It's fine. I love the engagement. Everybody has a different strategy. Everything I talk about my portfolio, none of it is advice for you to copy me. I am more risky. One of the reasons I'm more risky is because I have other investments. So this account is really my highest concentration of risk, and I'm documenting my journey to financial freedom. If you like this kind of content, make sure you subscribe to this channel so you don't miss it. All right, let's talk about Ulty, folks. For those who are new, Ulty is a yield max fund. Look at this right on their page. It is paying a whopping 85% distribution, over 85%. How does this work? Is this a magic fund? Why isn't Warren Buffett all in on Ulty? That's the real question. Okay, let's talk about the dividends. Okay, so this Friday we received a dividend. It was over 10 cents a share. We got 0.1029, slightly less than the previous one. And let's talk about what is this dividend? What are you getting? Where is it coming from? How does it work? All right. Before we get into that, I had somebody leave a comment saying that there was actually no prospectus change on Ulty. They're saying that nothing changed back in March, and they still run the same way as they ran this fund from the inception back in 24. Somebody else left a comment saying, well, that's not true because you can just go to YieldMax website and you can pull up their new prospectus. So I did that, and I pulled it up, and this is on the YieldMax website. And I think the second person's correct because this prospectus came out February 28, 2025. So starting in March, the way they ran this fund has changed completely. They started actually holding their underlinings. They started to pay out weekly, the way that they're protecting themselves by using puts. So lots of stuff has changed. Now, I'm not like nerdy on all the technical analysis of how a fund is ran. That's not my expertise. And if you are, you can maybe chime in on some comments and see what I get wrong in this. But basically, everything has changed. So the management fee is $1.24, and total annual fund operating expenses after fee waiver is $1.30. Okay, so not a dollar. I'm sorry, 1.3%. I don't know why I keep saying dollar. So that's in an investment world, that's really high. Okay, so if you're like investing, let's say you're 20 years old and you're trying to build a portfolio that you're going to take out when you're 65, you want to get into very cheap funds, like something that doesn't have a huge expense ratio. But these folks are actively doing options on these high volatile stocks. So I think what they're taking is fully deserved as long as they can deliver. So yes, there was a prospectus change, and it did take effect in March. As you can see, February 28th was the day that prospectus was published of this year. All right, let's talk about Ulty's holdings. If you go to Stock Analysis, one of my favorite websites, this talks about all of the positions that Ulty's holding. This is one of the reasons I like Ulty, because it's holding over 127 different positions. If you go on all in MISTY, MSTY, which is YieldMax's option trades on MSTR, MicroStrategy, or it's called Strategy now, you're kind of putting all your eggs in one basket. And I had a video that went very popular with lots of mixed opinions, is when I sold all of my MISTY position. What I like about Ulty is it actually holds some MSTR. Look at this. One of its largest positions is in fact an MSTR. It has 5.21% or 213,000 shares of MSTR. So that's, I'm already exposed to MSTR just by holding Ulty. It has Robinhood, it has Upstart, Reddit, it has this whatever ASTS is. I'm not sure what that is. Oklo, this one had a huge rise. Palantir, another awesome performer. Coin, another awesome performer. RGTI has been exploding. SMCI is on a move. Tesla, obviously lots of volatility in Tesla. Now I've seen lots of hype about this one. So again, you're seeing 25 top holdings. There's over 120, I guess. So really cool that it's balanced out. You're able to spread out your risk, and also you're able to pull in your reward from the different types of holdings. So that's what I like. Next, we'll take that out of the way, folks. Let's talk about price. Okay, this is, I think, the largest thing that I don't think people understand, and I didn't understand this either. And I wanna really dive in on this. Okay, back in the day, beginning of this year, I was following some folks on YouTube who had their channel, who were all like Yield Max fans, and they just kept buying Ulty. They would get their dividend, they would buy more Ulty. They get their dividend, they buy more Ulty. And I never understood it, because this fund, when it came out back in March of 24, started at $20. And every single month, this fund would just drop. It would just drop. It would just drop. It would just drop. And I used to refer to this as a ski slope. If the fund you're investing in looks like a ski slope, yes, you might be getting a large dividend, but you're basically just getting your own money back. If the share value is dropping, then your position, the value of your position is dropping. Yes, you're getting some money, but it's dropping by the amount of the money that you're getting. So you're not really getting anything at all. Okay? And let me demonstrate this for you. Let's say we have a hypothetical scenario. Let's say this fund comes out March 1st, 2024, and we'll say you have $10,000 laying around. Person A, let's call him Angus. He goes out and he puts in $10,000 into Ulty, March 1st, 2024. And then let's say we have person B, we'll call him Bob, and he goes out and he puts $10,000 into SPY. There's a really cool website, folks. It is called, dividendchannel.com. Okay. Now, let's say these folks, that's all they do in the beginning. They don't add a single penny. They just put their 10 grand and they wait. And let's say from March 1st, 2024, all the way to the lowest of low, which was April 4th, 2025. Let's say what happens to their $10,000 on April 4th, 2025. We'll compare Angus to Bob. This is Dividend Channel, free website. You can use it. You can compare any two stocks, dividend stocks, regular stocks, whatever stocks, and it will calculate the dividends for you. It'll calculate basically if you were to invest the dividends, if you weren't to reinvest, and you can compare two basically between each other, or you can compare it to like S&P 500. So that's what we're going to do. So if you bought in March 1st, 24, and let's say you're looking at your portfolio April 4th, 2025, at the lowest low of Ulty. You click this button. I have S&P 500 compared to Ulty. You click this, and this pops up. Okay. Here we have it, folks. I'll try to zoom in a little bit so you guys can see a little better. Okay, so Ulty, SPY. Here's the chart on the right. $10,000 start, $20 a share. SPY was $512 a share. Ending price, $5.45. SPY, $5.05. We did have the market correction, right? We had the announcement of the tariffs. We had the huge drop. SPY, you lost money, right? Okay. Dividends reinvested share. Okay. Let's see. Total return. Ulty, you lost 23%. SPY, you're up 0.09%. I think SPY must pay some kind of dividend, very tiny one. Let's do this. Let's compare it. No, yeah, let's just keep going. Okay. All right. So, what is the moral of the story here? And this is what dividends reinvested. So everything Ulty paid you, you bought more Ulty of. Ending investment. If you put $10,000 into Ulty, you would have $7,682 left. You would have lost all that money. SPY, you would have made $8 in over a year. So not very much, right? Because of that huge correction. If you were not to reinvest the dividends, you actually would have been better off because Ulty just kept eroding. So all the money you were pumping back into Ulty, it continued to go down in its NAV. And this is going back to what I was saying. Folks who don't believe in NAV erosion, just use this calculator, folks. This shows you everything. There's no masking. You can't be buying Lamborghinis thinking you're super rich when the value of your assets are dropping. So the SPY person, which was Bob, actually made $22 by reinvesting the small dividend that SPY pays. Okay, so that's the story of Ulty until they had the prospectus change. Now, what changed and how's the fund performing now? And let's do the same comparison. Now, this is what I'm talking about. Back in March, they changed their prospectus. Now, March, we still see the value of Ulty dropping throughout March, and this is really what tariffs were doing, okay? But let's say March 1st is our starting point because that's when the prospectus has changed. So let's say we have Ulty, and we're going to move up a year. Now we're going to go into 2025 of when that prospectus has changed, and we're going to look at the latest. So let's see, last Friday was the 25th. Okay, so we'll go to July 25th, 2025, and we'll compare Angus to Bob. Okay, so $10,000 into Ulty, March 1st, 2025, and end date July 25, 2025, and Bob investing into SPY. We'll run that same calculation. All right, let's take a look at this and see what the difference is today. Now, both of them have experienced that dip. Keep that in mind. Because March 1st, this was pre-tariffs. So you see this dip on the chart. You see how both of them have dipped. Now look what the difference is. As we're getting out of this dip, look how much Ulty is picking up steam. So Angus, who invested in Ulty, on July 25 of this year, so just yesterday, would have been up $2,409 if they bought Ulty and reinvested their dividend. Bob, who invested into SPY, would have been only up $979. And this is the difference right here. Total return, 24% on Ulty, 9.79% on SPY. So anybody who's saying that there was no prospectus change or nothing has changed to this fund, just compare those two time periods. Just go to dividendchannel.com. This is not my website. This was built by somebody else, so it's not like I've tweaked it. And do your own research. Compare it. Now let's take a look without dividends reinvested. So let's say Angus, who bought into Ulty, every single dollar that they took out of the dividend and they went out and bought groceries or whatever, what happened to their total return? Now, you can see they missed out on some opportunity because here Ulty got, on July 25th, we got $11,730, and SPY we got $10,973. Okay, so total return 17.3%, and really the same return 9.73%. This is my case for Ulty, folks, and this is why I went really heavy into it. I took this data, I looked at these time periods before the change of prospectus, after the change of the prospectus, the way they're running the fund, dividends they're paying out. And this is why I have so much faith in it. So folks who question me, they say I'm really risky, and yes, I'm risky, but everything's risky, okay? At this point, everything's risky because it's like one day we have tariffs are being pushed out, next day we got new tariffs or something stupid happens. This whole year with what's going on in politics and the market, it's just it's risky as a whole. I don't know. Maybe somebody who's sitting on gold's probably doing much better, but anyways, that's what I wanted to show you guys. I mean, this I think is a clear explanation on what happened to the fund. All right, let's talk about your dividend. How are you actually making money, right? Now, I'll give you a very simple example, and this is very important to understand with these dividends. When I started this whole dividend thing beginning of the year, I really didn't understand it much, okay? I started investing into like 15 different funds. I was tracking them. I was trying to understand how they work. What I didn't understand was that every time you get a dividend from these funds, the value of your stock drops by the dividend amount. So let's say right here, I'll just give you an example. If we go back to July 20, let's see, July 23rd. Okay, so July 23rd, which was Wednesday this week, the value of Ulty that day, let's say at the market open, was $6.30. Okay, so if you went out and you bought Ulty, let's just say you bought 100 shares of Ulty. Okay, I'll now just give you some simple math for you. You went out on Wednesday and you bought 100 shares of Ulty for $6.30. You spent $630, okay? Now, Wednesday, the 21st, is the declaration day. So when the market closes at 4 p.m., YieldMax then says, okay, this week's payout, because this is a weekly payer, you're going to receive this amount of money. And that's exactly what happened. So on Wednesday, declaration day, on July 23rd, it was announced that you would receive 10 cents per share. Okay, so you bought 100 shares. So that means, and we'll just keep this up. We'll pull an oracle on this one, and we'll show you another calculator. We're gonna have a calculator circus out here. Okay, so you got 10 cents per share, and you have 100 shares. So you would get $10 on Friday, right? Now let's see what happens on Thursday. On Thursday is ex-dividend. And what happens Thursday night is the value of the stock drops by the dividend amount. And watch this. Thursday open, we are down to $6.24 a share. We'll pull out another calculator. $6.24 a share, and you have 100 shares. Okay, so now this is the value of your position on Thursday, $624. So on Wednesday you had $630. On Thursday now you're missing $6. Now what happens on Friday? Well, on Friday you get your dividend. So you get that $10 that comes in, right? Now let's watch this, and what do we close on Friday? Because that's really what matters. On Friday we close at $6.27. So 627 times 100. So the value of your position is now worth $627, and you got the $10. Okay, so 627 plus 10, you're at 637. So you made $7. That's really what you made. You made $7 because it hasn't recovered back to its Wednesday price before it went ex-dividend. And that's really the whole issue, right? So if we can get back to that Wednesday price, then this is a golden goose. If this continues to recover. Now, look at this. If we just go back a little bit. And I think this is where I really saw Ulty going on a huge move. If you go back to like July 14th, look at this. We were, well, actually, go even back further. July, let's see here, July 11th, right? We're at 627. Next week starts 629. It goes up. It goes up 640. You get your dividend. It literally on X dividend, it's the same price. It recovered its dividend on X dividend. And then on Friday, you made even more money. And this is when I was like, wow, is this thing a golden goose? Now, it had a nice push up. Okay, these are all pennies. I mean, look at this. This is all pennies. But that's really what has to happen. It has to be able to recover. And if it doesn't recover, you're just getting your own money back. But in this example, we still made $7. We made $7 on our initial investment. Okay, so we invested 637. We made $7. So what did we make in 1 week? Well, if we divide 7 but divide by 630, we made 1.1%. Okay, and 1.1% times 52 weeks, that would yield you 57% in gains. Now, what am I getting at? Well, all of this is going to matter. The price of the NAV is going to matter. So as long as it continues to do what it's been doing since really March 1st, I mean, if we go back to March 1st, we were at, I don't know what we're at, $7 or whatever. But I mean, we've seen this drop, but we're seeing the recovery from the drop. As long as it continues to dance around and move sideways and recover its dividend, even if it's recovering its dividend partially the week that you're receiving the dividend, you're still making money. Now, if it does this, what it did in the beginning, you're losing money, and I showed you that in that calculator. So that is Ulty. Now, do we go on Ulty? And I'll just show you my account, folks. On Friday, I bought another 1,000 shares. I am bullish, okay? You might think I'm stupid, whatever. May I lose all this money? Possibly. Don't follow me, okay? I have 31,000 shares. Right now, I am down $1,500 on Ulty. What did I make on Ulty already? If we go back, I made on Ulty almost $6,000 on Ulty. I made $5,836. Okay, we're going to subtract what I lost. What am I down? Okay, so 58.36 minus what I'm down on my position. 1,525. Okay, so 1,525. So I've made $4,311 on Ulty in 3 weeks. And that's the way I look at it. That is the true and only way to look at dividends. If your NAV is going down, you're not actually making any money. And I want everybody to be clear. Listen, this is one of the longest videos I've ever made, but I think I went over a lot of points here. So I hope you guys enjoy this. If you do, I would really appreciate a like, a comment. Let me know what you think. Is Ulty an answer for you? And subscribe if you haven't yet. We'll see some other videos that I publish in the future. Have a great weekend, everybody. Take care.